All right, I have 9 o'clock straight up. I think we might have some people logging on here a little bit late, but we're going to go ahead and get started. I want to welcome everybody to the second installment of the JCCS Live Q&A webinar covering the Families First Coronavirus Relief Act and the CARES Act. We appreciate everybody taking the time to log on today. I think what we've seen over this week is a lot of fluidity on the guidance, so we definitely have some additional items to share for you that they're going to be clarification of items that we talked about last week, a few expansion on some items that we just didn't have time to cover, some other questions that clients and some of our employees sent in, so we'll cover some of that as well. Also, just want to emphasize we do have two areas where we can communicate. One is the Q&A area, and we would like all participants to share their questions related to either act in that area. Other participants can review those questions and can vote them up by clicking like, so we can get the most popular questions to the top and make sure that we address those. So watch that Q&A area during the webinar for questions to be posted. There's also a chat window, and that's really just kind of for technical communication areas, but anything that's a question related to the content, please put that in the question Q&A box. So with that, I'm gonna turn it over to Erin to get started in our very first section.
Great. One other thing is that we are recording this session just like we did last time. I believe we will have it up probably within a day or so. It does take a little bit of time to do the video conversion. So we are recording it. So any questions posted, any answers we get will be recorded. So with the Families First Coronavirus Response Act, we have now started to see employers pay out those wages. Most payroll softwares have been updated with the new pay types. The Department of Labor is also still updating every Friday their long Q&A section. It's now up to 79 questions and answers, definitely expanding on some of the items. And we'll go through a couple of those examples today. Some of the more specific areas that it has expanded on are whether self-quarantining without any healthcare provider qualifies for any of the reasons for leave, which is unfortunately unavailable. So if you have an employer or employee who decides to self-quarantine but is not searching for a diagnosis or seeking out medical assistance, then they wouldn't qualify. But they do if they are actively seeking medical advice. Now it's hard to regulate that or ask for proof on that as the employer. We do have some updated request forms that ask for a little bit more information. So anyone who asked for those request forms on the last webinar, we'll be sending out some updated ones to you. If you want a copy of those, feel free to let us know either in the Q&A, ideally in the Q&A, because then we can capture your email address and get that out to you. The other big piece that we've seen updates on is the state directives for stay-at-home reasons for leave and whether that qualifies. It seems to be pretty complicated and very dependent on an employee-by-employee basis. In most cases, it seems that if the stay-at-home directive is keeping an employee from coming in and performing work, and their work is available for them to perform, then we see that they are eligible. But if that isn't the case, it's typically not eligible. And we have a couple scenarios that we'll go through on the next couple slides. We did also get some additional guidance on the exempt businesses. They laid out needing an officer of the business to determine whether the expenses are higher than the incoming revenues, you can potentially be exempted if you have less than 50 employees. Also, if letting the employee have time off, if that would cause the business to not be able to make decisions, like if they're a key decision maker and need to be there due to knowledge or skills, you can be exempted from that as well. So there's a little bit more information on that. So talking about that stay-at-home directive, we have a scenario A. We're saying that the employee lives in a state with an active stay-at-home directive, like Montana. Do they qualify for emergency paid sick leave based on reason number 1, which is the employee's subject to federal, state, or local quarantine or isolation order? So for number 1, with this scenario, if work is available, so in this case, the employee has work available to be performed, but they can't perform the work at home, or they can't perform the work at the work site due to the stay-at-home directive and cannot telework, the employee is potentially eligible for the emergency paid sick leave for reason number 1. Now, if there is no work available, so let's say the work site was closed, there's no work to be performed, no work available for the employee to perform, then they would not be eligible. So what we're finding and reviewing scenarios, like I said before, is that eligibility really depends on whether or not work is available for them. We did talk yesterday a little bit about the comparing employees. If you have 2 employees that are in the same position, one can work from home, one can't, and there is work available, then that person who can't work from home would most likely be eligible. So it seems to be employee by employee basis. There's no clear cut, yes, this employee qualifies, or no, this employee doesn't qualify. So something to evaluate with each employee. We've also got a lot of questions about 2-parent households and when they're eligible for the employee paid sick leave and the emergency FMLA. And for this example, we have a 2-parent household that has children at home due to school and childcare closures. Are they both eligible, and how is it paid? In this case, both parents are eligible for the expanded paid sick leave and the emergency paid sick leave and expanded FMLA, but they can't be paid concurrently for each parent. So I included a little example down below where week 1, the parent 1 is the one performing childcare and receives 40 hours of benefits. Week 2, parent 2 performs childcare and also receives the benefits for that week. Week 3, I changed it up, put parent 2 as providing the childcare and getting paid the benefits. Week 4, parent 1 performed the childcare and received 40 hours of benefits. At that point, they would have used their 80 hours, each of them, for the emergency paid sick leave, reason number 5, which is to stay home and take care of children due to school or childcare closures. They would now be eligible to take the expanded FMLA, and that can be paid intermittently as well, just like above. You can go down to the day or the hour level in that intermittent schedule. So a person could work a couple hours from home, but then need to do childcare for the rest of the day. So you can definitely do the intermittent schedules. There is another example on the DOL Q&A website that breaks it down by hours as well. So we feel pretty confident in that. The other big question for us is unemployment insurance. We are now starting to see the Montana UI division reach out to employers and ask for information. The one thing that we have not seen altogether or consistently is employees stating that it's due to a COVID-19 either closure of their work site or inability to work. So I think we need to continue emphasizing to employees that when they make their claim, they need to indicate that it is for COVID-19 reasons. The federal pandemic unemployment compensation, we've seen a little bit of information come out, not a lot. I'm hoping that as it gets closer to actually dispersing to states, we'll get more of an FAQ on that. Right now, we're seeing that some sources are saying that the $600 will not be prorated based on the employee's rate of pay. It's just a flat 600. There is the concern that with that added $600 a week, it's going to encourage employees to stay on UI until that benefit is paid out rather than coming back into work. It'll be interesting to see how that plays out in accordance with the PPP loan. We haven't heard guidance on that yet. So one other thing that we heard about early this morning from one of our staff members, Casey Nimitz, in our Missoula office, sent us some information about Montana State Fund. And I want to pull that up real quick. So if you have workers' comp insurance through Montana State Fund, sounds like they are potentially allowing policyholders to defer premium payments through June 30 and potentially longer, but that will remain in place even if Governor Bullock's stay at home ends earlier. And then there is also a note that policyholders who continue to pay wages to their employees who are not working won't be charged workers' comp premiums on those wages. So we'll definitely want to make sure that you're keeping record of wages that are paid for employees that aren't performing any work. You're just paying them to keep them whole during the stay at home. So that was just released this morning. We'll definitely send out more information as we hear it. I think that is it on my quick update. Any questions?
Just a first comment. We've got a lot of requests in the Q&A for the copy of the forms.
Perfect.
So we'll follow up on those with those participants and get those out. So.
Aaron, a good one here is in regards to unemployment work. How does unemployment work with reduced hour schedules?
So when the employee makes a UI claim, they will want to state that the claim is due to reduced hours in as reflected by the COVID-19, or they are working reduced hours due to the COVID-19. They can still work and receive UI benefits. It just decreases the amount of benefits they receive. And they just need to keep the UI department updated with the number of hours they're working. The UI department will reach out to the employers and ask for, they send out a little, either through their website portal, a request for information, or they send out a mailer. Usually has a quick turnaround time on those requests. So you'll want to get them back pretty quickly to the UI department, but you'll usually get those fairly frequently if someone's doing a reduced hours schedule.
Great, Aaron. I've got another one here. How do employees transition on and off unemployment based on the various benefits?
So right now, we have a call into the UI department to get some confirmation on this right now. Right, it seems as though if an employee is going to take advantage of one of the benefits, they just need to let the UI department know that they are back as employees for the employer. Then once those benefits would be paid and then they're laid off again, they could file again. Like I said, we're waiting on confirmation from the UI department on that, but that does seem the way that we would have them do it. That's how we usually see it happen when people are doing reduced hours schedules, is they just update their claim stating that they're an employee again at the same employer. And then they should be able to get onto the emergency paid sick leave or expanded FMLA benefits. And once those run out, they can reopen their claim at UI.
Tony's going to talk about the PPP here soon, but Aaron, this one kind of talks about that because that's a very popular loan program. Can employees force an employee to return to work so they don't lose the provisions of the PPP?
I would say Tony may have a follow-up on this one for the PPP side of things. If an employee doesn't come back to work and you've offered them their position back, you would alert the UI department through one of those notifications, and they would most likely stop receiving UI benefits because there is work available for them and they've been offered the position. As far as the provisions for the PPP, Tony, correct me if I'm wrong, but if you try to hire back an employee and they don't take the job, you're most likely going to start looking for another employee to fill that position. So if you have another employee that fills it by June 30, you should be fine on the provisions of the PPP. Does that match what your research says, Tony?
Yeah, I mean, we'll talk about it here a little bit later, but that the measurement for forgiveness is on an employee by employee basis. So obviously, if you have one employee that doesn't return, you're allowed to replace that employee to return your workforce to full staff. So, yeah. And I think you kind of answered my next question, Aaron. An offer of employment to an employee, what I understand, that would make them ineligible to receive unemployment benefits then?
Yes, if they've been offered the position or a position, they, depending on the rate of pay and the type of position, like if it's a position that's going to pay less than their old position, they may still get some benefits, but typically the offer of employment, and if they don't take it, that will make them ineligible to receive full UI benefits.
So I'm going to.
Oh, go ahead, Tony. Go ahead.
I'm going to take one from the chat box here. Has the state of Montana provided flexibility with respect to payroll tax payments? Is that something you know of, Aaron?
You know, I have not seen anything from the state of Montana on that. I wouldn't be surprised if they did push it back, but I will add that to my double check list. We're talking about the withholding payments, right? Or your quarterly payments, your unemployment insurance payments?
I would assume so, yeah.
Okay. I will definitely research that one. I don't know it off the top of my head.
Got another one here, Aaron. Which employers are covered by EPLS? Question is just employers with over 50 employees.
It is all employers with less than 500 employees. There are some exemptions, and the DOL did issue some guidance on those exceptions and exemptions. But in general, all employers with less than 500 employees need to provide the benefit to their qualifying employees. So I think the thing to remember on that is that employees have to qualify for the benefit. It's not just something that you have under 500 employees, so you have to pay this out. The employees do have to have a qualified reason to be out and receive the benefits. So most of the exceptions that allow an employer with less than 50 employees to be exempt are involved in the kind of going concern whether the business can stay viable and pay out those benefits. If it can't, then they may qualify for the exemption. But pretty much everyone with fewer than 500 employees.
Aaron, this is one I think might be, I think you touched on it, but just to rehash it, to be qualified for the emergency medical leave, if a person is just concerned that they have it, does that qualify? Or can you just kind of retouch on what qualifies for the emergency sick leave?
Yeah,
a lot of characteristics of it, but this one specifically just saying if someone's concerned they might have it, are they eligible?
So that's where, when you say have it, you mean have COVID-19, right?
Correct. Yeah.
So this is where there seems to be a little bit of gray area. If a person is concerned that they have it, they should be seeking medical attention. And the seeking medical attention seems to be the qualifier that allows them to be eligible. So if they think they have it and are going to doctor's offices and can prove that they're doing that, then they will be eligible. If they're just self-quarantining because they think they have it, they aren't seeking medical advice, there is no indication that they are qualified to receive the emergency paid sick leave. So they definitely need to be taking the steps to be diagnosed.
Awesome. And I'm going to try to sneak one more in because this one was kind of, people are clicking the little thumb box to kind of push these questions up. So a couple people would want to know on this exact topic. So is it still true that the first 10 days of this emergency leave is to be unpaid? And then after 10 days, they qualify for an additional 10 weeks at 2/3 pay?
Yes, that is the expanded FMLA. We expect that most employers will either pay out the emergency paid sick leave or some other leave or vacation leave for those initial unpaid 10 days. So in the expanded FMLA, they do have the first 2 weeks are unpaid, but you can use other paid leave benefits to fill in those 10 days. So yes, 2 weeks at unpaid unless you're paying with some other benefit, and then 10 weeks of the pay at the 2/3 rate due to school closures or childcare provider closures.
Okay.
And I think with that, I'm up on time. So if you have any other questions, definitely keep putting them in the Q&A and thumbs them up. And we're going to throw it over to Tony.
All right, thanks, Erin. Yeah, definitely a lot of good questions still in the chat box that are in the Q&A that we haven't answered yet. Again, we're going to try and stick to that disciplined 1 hour, 20 minutes per topic. That way people can get on with their day if they need to, and then we will stick around and answer as many questions as we have time for that are still in that Q&A area. So keep putting those questions in and bumping them to the top, and we'll get to them. So I'm going to spend a little bit of time on the self-employed and independent contractors provisions in the PPP program, because those folks are coming up on their application start date, which is today, in theory. So we kind of expected to see some additional guidance relative to self-employed or independent contractors, maybe an additional borrower information sheet. That has not been issued. So what we're looking at is basically going back to the original definition of payroll costs in the Act. So on the next slide, I do have basically exactly what that guidance says. So the definition there, we go through the definition of traditional payroll costs, and then this is the language that is and the sum of payments to or income of a sole proprietor independent contractor, that is wage, commission, income, net earnings from self-employment or similar compensation, again capped at $100,000. And then also if we've got a self-employed with employees, they're going to add in their other payroll costs as well to determine their total PPP loan application. So their own earnings from self-employment are capped at $100,000 plus any amounts that they pay to employees. So kind of looking at, so what does that look like for documentation for specific examples? So we've kind of got a table here. For example, we've got a self-employed individual. They're either filing a Schedule C or a Schedule F on their personal 1040 tax return. So they're going to need that as a source document. Of course, if they have employees, they're going to need their W-2s. That's a form of compensation to employees. Payroll forms that they're going to need to provide to support the costs that they pay to employees is the 941s, UI5s. What's the form of compensation of the owner. You can see in all three instances, that's going to be a owner draw. And then to provide to the bank to substantiate what net earnings from self-employment are would be your Schedule C or your Schedule F net income. Looking at independent contractors, there is some question of, what distinguishes self-employed from independent contractors. Obviously there can be instances where a person does not file a Schedule C, but certainly they can file a Schedule C, so they may have expenses or may not have expenses to go with that income as an independent contractor. So they may be just filing that on page 1 of the 1040 through Schedule 1. Independent contractor, we're assuming that they wouldn't have any employees, although they certainly could have employees. But for this example, we've indicated that none. Their form of compensation is going to be a draw to themselves just to pay their personal expenses, living expenses. And then their form of substantiation is going to be 1099 miscellaneous forms that they receive from businesses that they're an independent contractor for. And then they also may file a Schedule C and would need to provide that if they do file a Schedule C to demonstrate what their net earnings from that activity are. Also list single member LLC in here because there's some question, well, are they an entity? Are they self-employed or a sole proprietor? Single member LLC, they file as a Schedule C or Schedule F for tax purposes, so they would essentially follow the same substantiation as that self-employed person. So on the next slide is go through a couple of examples on how to calculate that. So for 2019, we got a self-employed individual who filed a Schedule C and reports net earnings on that Schedule C of $72,000. For this example, the business has no employees, so they would get 2.5 times their average net earnings from self-employment. So 72,000 divided by 12 months times 2.5. So they would be eligible for a loan amount of $15,000. So that $15,000, they would be eligible to pay owner's draws, mortgage interest that's reported on their Schedule C, and utilities and rents that are also reported on their Schedule C. So these last items are business expenses. The first item would be owner's draws. Example 2, we're taking a Schedule C. They've got net earnings of $120,000. So obviously they're over the cap of $100,000. They would be limited to the $100,000 divided by 12 times 2.5. In this example, we're saying that they've got a couple of employees. So we get to add in that average monthly payroll cost to those employees times 2.5. Also, their loan would be $43,000. They would then be eligible to use that $43,000 to pay owner's draws, mortgage interest on the Schedule C, utilities, rents, and of course those payroll costs to the employee. And they would also need to meet the employer retention rules that we're talking about a little bit later. So they would need to return their workforce to full status to receive 100% forgiveness on that loan. Moving to the next slide, just talking a couple examples about independent contractors. We got $60,000 reported on Schedule 1. This comes in from a 1099 miscellaneous. That's the only item that they have. Loan would be $12,500. 60,000 divided by 12 times 2.5. That 12.5 would be eligible to pay owner draws to that independent contractor. Example 2 for independent contractors, really not much different than the self-employed on the previous slide. They reported on Schedule C, no employees, but they do have other business expenses. Again, we got a loan of about $8,900 based on net earnings to self-employment of $42,700. All right, moving down to the next piece. I want to talk just a little bit about partnerships and LLCs as well. We had a question last week whether guaranteed payments were an eligible form of compensation or payroll costs under the Act. And the guidance that we see so far is if you are a partnership and the form of compensation to the owner is a guaranteed payment, that would be allowable substantiation for payroll costs and would be included in the loan calculation. For partnerships and LLCs taxed as a partnership, whether you've got employees, you'll be looking at adding those employee costs in, and then for your own personal compensation as the owner, you'll be providing your Schedule K-1, which should show your guaranteed payment and any owner's draws that you've taken. All right, now just a few other clarifications that I want to add. You know, what will I need to calculate my PPP loan? So this is just kind of a full listing of items that you should gather. If you haven't already done your PPP application, you'll need your federal forms W-2 and W-3. For your quarterly reports, most banks are going to be looking for that rolling 12, meaning it's going to be first quarter of 2020 plus the last 3 quarters of 2019. Also allowed if Q1 is not available, you can use 2019. Some banks are being pretty rigid on that rolling 12, but we have seen others accept a full 19. So you're looking at your 941 forms and your UI5 forms. You'll want to provide a payroll history covering that same 12-month period, and also a payroll history for the payroll date covering 2/15. So the application asks for number of employees. So this is an eligibility question. So we're looking at, do you employ more than 500 employees as of your last full payroll? If you do your own calculation, that you should provide a detailed calculation of the loan amount to the bank. It is not the bank's responsibility to calculate the loan amount. However, the guidelines indicate that they must make a good faith effort to review the calculation for accuracy. So any detail that you can provide them is going to make their job a little easier and your life a little bit easier as far as follow-up questions or amounts being disallowed out of your anticipated PPP loan. Then we also talked about if you are self-employed, sole practitioner, you may be asked to provide a copy of your tax returns, your 1099s or K-1s or other payroll verification that might be requested from the bank. Now I just want to spend a little bit of time on the EIDL loans, kind of take a little deeper look at that. So EIDL loans and the emergency grant, they're straight through the SBA. I've put the website where you can apply for relief on this particular slide. The covered period of those costs is a little bit different than the PPP. It actually runs the full calendar year of 2020. The eligibility on the borrowers is a little bit broader than that PPP loan. And you can check the box to get the emergency grant of up to $10,000. Now, Jake forwarded me a link to an article this morning, kind of interesting, maybe frame a little bit of expectations. The SBA is indicating that initial advance on those loans could be limited to $15,000 plus the $10,000 advance on the grant. And then secondarily, they'll probably issue additional funding afterwards. I think the intent is that people should be getting that PPP proceeds. So you, as a business, you may have an expectation that initial funding of that loan is going to be reduced down to $15,000. Eligible costs are a little bit different on the EIDL loan than it is on the PPP. Couple of differences here. This third bullet point, if you have increased costs due to interruption in your supply chain, so you're having to go to different vendors to receive your materials to continue business, and those are resulting in increased costs, you can use EIDL proceeds for supply costs. Rent and mortgage payments, no difference there. And the last one is if you have obligations that you cannot meet due to revenue loss. Okay, so you have to demonstrate economic injury there. A little bit about the disbursement process of the emergency grants. This is a self-certification. So it's basically 4 screens on their website. You're doing a self-certification under penalty of perjury that you're eligible. Once that application is received, the SBA says they will issue you a check of $10,000 within 3 days if you check the box for the $10,000. And then the remainder of the application is going to be under the normal underwriting processes for the EIDL loan. So you'll be assigned a representative with the SBA, and they should correspond with you on items that you need to provide, such as maybe articles of incorporation, financial statements, additional statements to support economic injury, and so forth. And that process will take a little bit longer, but the intent is that that $10,000 emergency grant should be issued within 3 days. However, I have yet to work with a client that has received that within 3 days. So, with that, I think I'm going to pause. I'm probably past my speaking time, so let's take a few questions.
Tony, can you talk about businesses that use staffing agencies to provide their employees, and just how those are counted on this credit?
Yeah.
Sorry, the PPP loan.
Yeah, so we had that question last week, and I think we may have actually answered it incorrectly. We assumed that the staffing agency, because they issue the W-2 and report those employees on their 941, that they would count those employees, but it's actually just the opposite. So if you are a business using a staffing agency, you can get a statement from the staffing agency that indicates the payroll costs that those employees were paid, and that's eligible substantiation to apply for the PPP loan. So staffing agency employees are counted as the business's employees.
Great.
So, Tony, we have another question. Can you clarify whether workers' compensation is counted as a payroll cost and why it would be different than state unemployment payroll costs?
Yeah, so most of the guidance does not even mention workers' comp. Workers' comp is technically insurance. And also, if we go back to the language in the Act, it indicates state or local taxes that are assessed on wages. And workers' comp is often private, so it doesn't meet the definitions within the Act. So workers' comp, we're saying, is not eligible payroll cost for the loan.
Tony, can you talk a little about how the EIDL and the PPP are tied together if a business chooses to apply for both?
Sure. So just reiterate, the businesses absolutely are eligible to apply for both. However, they need to be careful if they're applying for that EIDL, checking the box, getting that emergency grant. And if that emergency grant has been used for payroll costs, that could ultimately impact how much of that PPP is forgiven, going back to that double dipping scenario. So if you've got the EIDL grant and you've used it on payroll costs, you come to the end of your PPP loan, that $10,000 is going to be deducted from the amount that you can have forgiven. So businesses need to be careful in how they use those funds so they don't come to the end of their PPP and inadvertently have a $10,000 loan at the end, or convert that EIDL emergency grant to a loan.
Yeah, another question. Can you give us some insight or initial insight into how the calculation for forgiveness is going to work, especially when it comes to businesses trying to restore their workforce?
Yeah, that's, we could probably talk quite a while on that and give some examples, but just in general, the calculations are going to be fairly complex because the measurement is on an employee by employee basis. So obviously, employers who have a large workforce, your calculation is going to be pretty complex in measuring whether you returned your workforce on a FTE basis and a dollars of compensation basis. I also will just take a moment to say that, businesses that are ramping up a little slower, if you have furloughed employees or laid off employees and you bring them back into your workforce by June 30th and restore them to full FTE status and their compensation, you can remove them from from the calculation altogether. They're exempt because you've returned them to the workforce in their entirety. So then you only have to look at those employees that you kept on staff the entire covered period for your forgiveness. So that's I know that's a big question of businesses that are going to ramp up a little bit slower.
Tony, this one I think is a burning question in our Q&A box here. So for the PPP, are all costs claimed for the forgiveness portion limited to the 8-week window following the closing of the loan, or can it extend beyond that?
Okay, so the cost, so you've got this 8-week window in which to use those PPP funds, but the covered period of expenses is February 15th to June 30th. So if you've got payroll in that 8-week window, obviously that's allowable. But let's say you have deferred on paying your rents or your mortgage payment in late February and March, you can make those payments in your 8-week window and count that towards for forgiveness. Likewise, you could probably prepay if you got a rental payment that's due June 27th and that's outside your 8-week window, you can pay that, disperse that rental payment because it's in that covered period through June 30th.
Excellent. There's a lot of other questions. We're kind of at the point where maybe we should switch over and talk about the credit. Aaron, did you see the others that kind of need to be addressed really quick?
Nope, other than you're still pretty hard to hear.
Okay, I've heard that. I'm sorry. I've tried to adjust my audio. So I'll try to yell a little louder. That won't be too hard, I don't think. Okay. So I guess in my mind, a lot of options out there include not only the PPP, but the EIDL. And then there's kind of a third piece of the puzzle, and that's this credit that's kind of looming out there. I think a lot of people have been focused on the PPP and trying to get money in for that, because what we're seeing is that the PPP is just a little bit more beneficial in most cases. And I have an example on that. But so what I want to talk about is that credit. It's the employee retention credit. It's a fully refundable tax credit on 50% of qualified wages up to the first $10,000 of wages per employee. And the wage range is kind of what you see on the screen there from March 13th through the end of the year. And then you must be an eligible employer. Our interpretation of an eligible employer, it appears to be pretty widespread in terms of who's going to qualify. I think a lot of people will qualify. You either have to be fully or partially suspended due to some sort of a governmental authority that is telling us to not go out and go either to a restaurant or to shelter in place. So our interpretation of Governor Bullock's shelter in place order would qualify essentially for all non-essential businesses. So if you are so for a partially suspended would be such as like a restaurant, you can't dine in, but you can eat out. That would certainly qualify. But then if you take any other type of an establishment that is kind of deemed non-essential, that would qualify. That would qualify. If you are, I think the second option to be eligible would be for all of our employers that are deemed essential. where you may not have to had to suspend operations or shut down in full. You'd have to look to kind of a gross receipts test and have what they deem a significant decline. I've got a slide on this. We won't dive into it too much. We did that last week. But in general, if you compare to prior year quarters and you see a big dip, what they deem below 50% of the prior year as being significant, then you would start qualifying for this credit. And the credit in general is reconciled on your quarterly payroll forms on 941. And you can reduce the amount due on that form by 941. I'll talk about that in a little bit. And any excess would be refunded to you in the form of a credit. So we can go to the next slide here. Just a couple other quick hits on this credit. I can see accelerated payers possibly seeing a little bit more advantageous of getting the credit up front. So rather than being a quarterly filer and waiting to file until the end of the quarter, in theory, accelerated payers could maybe see the benefit of this credit sooner, because in theory, what you can do is you can reduce the amount that you pay each week or each fourth. If you're accelerated, there's kind of different payment schedules out there. You can reduce that payment actually by the amount that you're calculating that credit. So you got to be on top of being able to calculate that credit. But in theory, that's how quickly you could experience the benefit of that credit. And for those that maybe even want the credit even further in advance, not just reducing the amount that you're paying with your payroll tax payments, if your credit's even higher than what you're having to pay in, you could file Form 7200, brand new form. We're still trying to learn it. There's no instructions on it yet. So essentially, you could apply for a credit. That's what they're telling us, and that's what the form's intent would be. All of the self-employed clients and individuals out there, this is not available to you, unfortunately. So our Schedule C filers, this would not apply. And also, if you are getting a loan through the PPP, it's not available for employers for that as well. So this would be kind of in lieu of the PPP in general. However, you can claim it in conjunction with those medical leave wages that we were talking about earlier. So you could do it in tandem with that, just not on the same wages. And then if you have over 100 full-time employees, there's kind of a odd rule out there that you can only count the employees that you've actually furloughed that are not working for this credit. If you're under 100 employees, though, then it's all employees that you're paying. This slide, I'm not going to spend much time on it. This is just an example. I had to note that to a couple of viewers last time. This is just simply an example showing people how to calculate the credit, how it applies. If you dip below 50% in comparison to Q1 of the prior year, then you trigger the qualifications for the credit. Remember, you have two tests. You can either look to your gross receipts to qualify, or if you were partially or fully suspended. Remember that. So this is one side of that equation. To qualify, you've got to dip down below 50%, and then you qualify for all quarters until you jump above 80%. We'll kind of leave it at that, Aaron. Let's go to the next one. This is one where I was trying to do a calculation between the PPP and the credit, kind of just trying to show a comparison of that. And that's on the next slide here. So let's jump to that. This is just a example once again where a company has 4 employees. They pay, and these are annual wages paid, and we are assuming that all of these wages these are applicable wages in terms of qualifying for the credit, right? So on this top box is doing the calculation in terms of the credit. The bottom box is talking about the PPP loan. And so in an example where you have 4 employees, grand total of wages paid are $165,000. Remember, the limit is on $10,000 for each employee of wages paid. Essentially, the credit then is $5,000 per employee. So the credit here would be worth about $20,000 for an employer. Now, right now, we're all rushing to get our PPP loan. And so you can see on the bottom, if those same wages were to properly qualify, you divide by 12 to get your average monthly payroll. And then there's the loan. Very, very simplistic calculations here. There's a lot more to be, there can be lots of other factors, but in general, you can see maybe the benefit of the PPP loan in this case. I ran one more example, and that just kind of shows where I think if you pay lower wages to more employees, I think that's where we're seeing this trip. The first thing that comes to mind are restaurants. If I've got 12 employees and I pay them on average $8,000 to $15,000 a year, I think this could work. I really do. Sadly, I kind of had to force these numbers to make it work. So I think it is going to be tough for the credit to win. But this is a big question. Jake, what's better, PPP or the credit? I'm hearing this $5,000 per employee. Whoa, that's a lot. How's that work? I just think that, I don't know, maybe Aaron or Tony can see what their calculations are coming in at. But not only did I kind of have to, make these numbers, manipulate them to work, but it's a close break even too. So there's a lot to be said about, well, if I had the 17.5 on the loan, maybe, I don't know, there's so many different things to look at here, but this just kind of gives you, I think, an insight on what's better, and hopefully this visually helps people on that.
Jake, just a comment there. I think where this is going to come into play, where the credit's going to potentially be better, is if you've got a situation where the business is looking at a large percentage that won't be forgiven.
Absolutely, Tony, that you're spot on. This, ironically, the name of this credit is the retention credit, and it has nothing to do with retaining employees. It's not looking at, did you have 10 before or 10 after? It's more theoretical. We want you to retain employees. Here's a credit for what you pay. That's another big question, I think, is because the PPP is very specific. We're going to give you the loan, but in order to get it 100% forgiven, you need to qualify. There's a huge qualification list. This is very, very cut and dry. If you qualify, here's your credit. Thank you for paying employees. So that's the credit. Quickly, the other, I think, applicable for people on this that are viewing our webinar today is to note that there's something else out there. This is kind of a reprieve a little bit. This is if cash is starting to get strapped, in theory, you can defer the employer portion of Social Security tax that you're having to pay in payroll taxes. You can defer that on all wages paid from March 27th through the end of the year in 2020. You can kick the can on that amount. Essentially, pretty much everyone qualifies, unless, of course, you had forgiveness and loans through the PPP. But if you amass $20,000 of employer portion of the Social Security tax, everyone qualifies. So I mean, this just is in place. There's no weird hoops we got to jump through. This just applies. And essentially, if you have $20,000 that started racking up through the year, you could kick that out to as far as the end of 2021 to pay just half, and then yet another year to pay the remaining half. So just something to keep in the back of our minds if times really get, times are getting tough, but this is just yet one more option that employers have to be mindful with their cash. And then on this next slide, I think I just have a couple miscellaneous quick hits. We talked about this last time. Everyone's focused on getting the money through these PPPs and EIDLs and talking about credits. I think it's important to know too that there could be some opportunity not only for the current year, but in previous years. We had some corrections and some amendments to some of the code in place. Interest limitation has been increased, so that's applicable to businesses who have a lot of interest expense that maybe are limited. They're lifting the level on that. Qualified improvement property. This was a big kind of bonus depreciation deduction. That was it was a technical error in the TCJA Act, and they fixed that. So I think we're going to see a lot of people going back for that. and then some business loss deductions were suspended. That's kind of it's a rare one, but something to be mindful of. I noted that there's a new Rev Proc that they released that talks about how we go back to amend specifically for partnerships. This would be for partnerships that were having to commit to the audit partnership rules. And I think that's a good read. It's something to talk with your accountant more about in terms of going back and amending, because there are some specific things you need to do to allow you to go back and amend partnership tax returns. So that's an important one to look at. And then finally, I just want to quickly touch on something else that's going to be applicable to everybody, and that is the stimulus checks that we supposedly are going to be seeing coming out. They're called the 2020 recovery rebates. These are the stimulus checks that if your household qualifies and you're under these adjusted gross income limitations, people will be getting these $1,200 checks per taxpayer and another $500 for each qualifying child. There's obviously lots of limits and regulations behind this. So I don't think we need to go into too much detail on that, but just again, want to remind people, and if they have questions, we'll try to answer those. That again, these are going to be coming soon. They were promising maybe something this week. Now it's next week. They've also now talked about a specific schedule if you don't have direct deposit information online on file with the IRS. That it could be a while before paper checks come out. I've heard as late as November. I've heard July and August. So it's important that you get your tax returns not only filed as soon as possible, but also hopefully have your bank information. They're pinning you down on that one, but that's the kicker, is if you can get direct deposit information on file. And they promise something on the website, still nothing on that for people to input their info. Okay, let's open it up.
All right, Jake, I've got one kind of on this credit again. Looking at businesses that are startups. So let's say they started up mid to late 2019. The PPP might not be applicable. How does that employee retention credit help, in an instance where they don't have sales to compare to?
Yeah, that's a great question. I don't think there's an answer. I think, unfortunately, you would not qualify in terms of looking at the sales test. So hopefully this business that is a startup is a non-essential business, because then I think they would certainly qualify under the partially or fully suspended declared by the governor. So I am afraid to say that if this is a essential business and you technically didn't have to close, you might be out of luck. Let's hope you can apply for the PPP.
Jake, we have another question on the ERTC, the tax credit. Can employers claim the credit on wages paid at the end of March 2020? Form 941 for quarter 1 2020 doesn't have any changes or any place to put that information.
Okay, that's good. So in general, if they were able to qualify right at the end of the quarter, there is not anything on the Q1 941 that indicates that they can take that credit on that form just yet. I think they've even plastered a little notice with that form if you were to look up that form online with the IRS. Basically, they're saying, hey, if you have if you have credit for this time period, you need to take it with your second quarter, or look to apply for early advance of the refund. That would be the other option, or reduce the amounts that you're going to owe in the coming quarter by that amount of credit, which would then get reconciled on your Q2 941. So that leads me, I think I might go over here. I apologize, but I think that just remains to be a good topic of discussion, in that there's been some loose interpretations, I think, of what qualifies, and like, what is the whole quarter qualify, or is it just a specific time frame? And I think we're hoping for more guidance on that. But just know that I think something will be coming soon, because the interpretations are kind of all over the board.
All right, I think we got time for one more question for sure in the allotted time. This one's kind of a nonprofits question on this credit. So we have a lot of clients that are 501c3s, but we also have clients that are other 501c4s, 501c5s. Can you talk a little bit about the credit as it relates to some of those other designations and 501c3s?
Yeah, so if you are a 501c3, you qualify for the PPP. I think we note that first. If you're not, and I think there's one other one, a 50C19, something like that.
Yep.
If you're everything else, if you're one of all the others, you don't qualify for the PPP. So I think you're looking at, if you go for the EIDL, or you're looking at this credit. I think it's important to note that they make a little weird, obscure rule for nonprofits in the credit here. And they basically say that if you're going to attempt to take the credit based on a full or partial shutdown, if you're taking that stance, they make a mention that it has to be for all of your operations, which I'm not sure how to interpret that. I guess they're saying that if you have one division of your nonprofit that is essential, I think maybe they're saying that you wouldn't qualify under the partial or fully suspended provision, and you'd have to go to the gross receipts. But I kind of have yet to see that in practice, so I'm kind of waiting to see. I just think it's important to note that there is kind of an obscure rule out there. I still think that most would probably qualify, as long as in general, all operations are at least partially suspended due to our shelter-in-place mandate. But overall, I think a lot of non-for-profits will be looking to this credit, because I think it's kind of the saving grace in that sense.
Great. Well, we're at our 1 hour time slot. So those that need to move on in their day, thank you again for joining the webinar. Hopefully it was informative. And if you have additional questions, please reach out to one of the panelists. We'll be sharing this recording as soon as we can get it rendered up on our website. We'll also be posting the slides if you want to get a copy of those as well. And for those that have time to stick around, we're going to continue to go through some of these questions in the Q&A box. So I'm going to take the first one that's listed here. The question is, on the EIDL, I heard that they are limiting the advance to $1,000 per employee. Is that true? There was some initial links to the SBA's website where they were taking the interpretation that they were going to, for businesses that had employees, they were going to limit the $10,000 advance to $1,000 per employee. Those links have since been taken down. So I don't believe that is their current stance. Those links are nowhere to be found anymore. So I think that's a false assumption at this point.
Tony, do you want to take the next one as well, where the calculation of the PPP loan is only on compensation, but the loan money can be used for compensation and other expenses? Why did they not include those other costs in the calculation of the loan amount?
Yeah, great. So the calculation is 2.5 times your average payroll costs, but your covered period is 8 weeks. So they're assuming that additional half 0.5 that you're adding on is going to be for those additional costs that are not payroll related. So purely formula based somewhere. That's how they came up with that. But that's why they're not included in the calculation. They're increasing the multiplier and then only allowing it that covered period for 8 weeks. So.
Tony, does the EIDL have a requirement of having employees, or is it just a reduction in revenue or partial suspension? Or
yeah, there is
that question.
Yeah, there's no requirement to have employees, and actually that's, a very common question is, hey, I don't have employees. What is there in any of this for me as a business owner? Um, well, you may qualify for a PPP on net earnings from self-employment, but you also can apply for an EIDL if you don't have employees, because there are those supply chain costs, there's the mortgage interest, there's the rents. So there are other items that can be covered by an EIDL, and really that economic injury, the potential for that is going to last well beyond June 30th, and that's really what the EIDL is for. Is if you think you're going to sustain some economic injury throughout 2020, they've got some funds to bridge. Now, obviously, only the 10,000 advance is going to be free money, but the rest is a very low interest loan. Access to capital is going to be very critical for those businesses to bridge the gap between now and when the economy gets back up and ticking.
There's a question here asking about an S Corp with 3 members who earn wages and take draws, and the owners could get the PPP for the wages and take draws during the 8-week time period. I guess that's a question. Tony?
Sure. So here we're looking at an S corporation. So the form of entity is important. So in an S corporation, your compensation is not guaranteed payments. So the draws are not going to count. So if you've artificially kept your shareholder compensation down, obviously the amount of PPP that you're going to be eligible for is going to be lower. So S Corp with wages to the owners, you're looking at the wages paid to the owners as your base for calculating that PPP.
Yeah, and to be clear, you look to the wages that were paid, using the rules that we have with the prior 12 months or last year's, whatever the banker kind of officially wants. Then that money must then be ran through payroll.
Yes, they can't use it for draws.
Right.
Yeah.
Right.
In an S corporation.
Yep. And then you're going to have that little, like Tony mentioned earlier, you're going to have that extra half, right? Because you're calculating a monthly average payroll multiplied by 2.5. The 2 should cover those 8 weeks. The extra half, rent, mortgage, utilities. If we're looking for that full 100% forgiveness. Did you see the question? What's the measurement period for the EIDL $10,000 grant, Tony?
Yeah, I see that one there. So EIDL is January 1 through December 31st is your period that those costs are eligible over. Obviously, if you apply for it now and you've got some mortgage payments that you've suspended, or rents that you've suspended, you can reach back to the beginning of the year and pay those costs, or you can hang on to those EIDL proceeds, let the PPP proceeds bridge you to June 30, and then use those going forward through the end of the year. So
that $10,000, this is answering our next question. It's kind of directed to you. I'll answer as well, because I think they're just asking, the $10,000 was kind of quote promised in 3 days. You mentioned that you had not seen anyone get the money within that 3 days. They're asking, have you seen anyone get that money at all? And I have not, personally. I don't know about you.
I haven't heard any EIDL monies flowing or emergency grant funds flowing as of yet. I'm sure they're out there, but I don't have any firsthand knowledge. Okay. So.
I hope to shall we see that soon. I think the PPP money is starting to flow. But I think that EIDL, just because, right, the PPP is being ran through all the banks. They're working with the SBA. I think they're kind of getting some sort of a fast track. And so that money's starting to flow slowly but surely.
Yeah.
The EIDL seems to have a little bit more of a formalized process. It's been in place for years. So I think they're a little bit more reserved at this time.
Aaron, we got a couple at the top of the chat box there. If you want to take those, we've got an employer who continues to work, or employees who continue to work but have applied for UI benefits from other places?
So when an employee applies for unemployment or they file a claim for unemployment benefits, the employee or the UI office is going to contact anyone that the employee worked for over the last 4 quarters, maybe a little further back as well. So if you do have an employee who files a claim because maybe they've been let go from their second job, you will still file it as they're still working, or maybe they have reduced hours, or whatever your situation is with the employee. And then they will probably get a prorated amount of UI benefits from being laid off from their other job. So definitely, I would expect to see more of these, especially on probably lower wage earners who have multiple jobs where they may have been laid off one or two of the other ones. You just need to fill out the UI form as they're still working or whatever their work schedule is. I did have a question about whether the UI claims will go against someone's experience rating or their experience rating or increase their UI rate. And that's why the initial claim with UI that the employee makes is really important, that they say that it is due to COVID-19 events. So because if that is the case, the claim does not go against your experience rating or UI rate or anything like that. So just something to keep reminding your employees when they're filing their UI claims, to make sure that they mention the COVID-19 events as the reason for their filing.
Now, I have, just to expand on that, Aaron, I have heard some comments from Montana Unemployment that if the state trust fund is depleted, it could overall affect all employers' rates in the future, but direct impact for COVID-19 within their business wouldn't have an impact.
Correct. Yeah. If we had so many employees across the board depleting that fund or using all of the funds that are there, then yes, everyone would see an increase in their rates. But you are right. The direct usage of the UI benefits by an employee won't directly affect their UI rate. It looks like we also have an expanded FMLA, or is the expanded FMLA required by employers that aren't required to do regular FMLA? And this is something that I know we were looking at the beginning. Brenda Payton in our Missoula office was looking at this with us. And I do believe, Tony, correct me if I'm wrong, or Jake, if you know off the top of your head, I believe that it still goes back to that any employer with fewer than 500 employees is required to provide the benefit. So just to me, it reads as, yes, they do need to provide the expanded FMLA benefit, even if they aren't required to do regular FMLA. Does that match with what you have read?
That matches my understanding as well. So
I can take this next one. The question is, for a new business owner without the 12 months rolling and no paperwork completed really yet, how do you qualify for really any of this? Well, I do think that it's a little bit trickier. I think if we look at the PPP, they do specifically state that if you were not in business, if you were in business, I guess, new in 2020, so early 2020, we can look at a little bit shorter time frame for purposes of if you paid anybody. So I guess the question would need to be, did you have any employees or did you pay yourself? I know I've got several startup S corporations, and anytime we have startups, one of the first things that you want to do but just can't quite do yet is pay yourself, and so it's that can kind of get a little tricky and very unfortunate, because they're looking for something that really wasn't possible, even though, I mean, to qualify you had to have done that. So I think in general it's tough. I really think that there's nothing great in place for startups, because let's say the credit's more of a forward-looking, forward-doing act, such as paying employees into the future, and you'll get a credit. One, do you have the cash flow to do that? Obviously, they're trying to help with it being refundable and as quick as possible. But I guess we got to make sure you qualify for that as well. So like we mentioned, startups can't go back to look at Q1, 2, 3, 4 of 2019 for purposes of the gross receipts test. So then hopefully they're a non-essential business and can qualify that way. But then the benefit though then lies with the idea that you're gonna pay, and it's not as if it's fully subsidized like the PPP can be. You have to kind of come up with money to pay yourself or your staff. So, and then I guess the next thing would be is, do you even have payroll? What if this is a self-employed person? It's just, there's not enough there. Tony, anything to add to that?
Yeah, just a little. There are some provisions, and it's going to be a little difficult because, we've got banks that they're receiving guidance from the SBA, and they're also making independent evaluations of what they can and cannot accept. However, there are provisions, there are interpretations if true payroll costs for you don't fit in the parameters of the timeframes that they've given you, based on whether you've acquired a business or you're a startup. You can appeal to the lender and say, this is actually a true measure of what my payroll costs are going to be during the covered period. It's not hard and fast guidance, but it does indicate that if your situation doesn't fit the rules in the Act, you can suggest an alternate calculation to the bank for the PPP at least. So
I would echo that too. I have heard seasonal businesses are a great example. If you can somehow demonstrate, because I think I'm a broken record, but I feel as if there's there's going to be this first wave of having to get the money, and there's going to be the second wave to prove you used the money correctly, right? So I think if you can appeal to the senses of a banker and the SBA of, hey, like Tony said, this is more indicative of what happened. And if you can demonstrate that in terms of providing payroll reports or providing some sort of documentation, then yeah, I think you go for it, because there's just so many questions and so many. Everyone has a different scenario, and they just can't put together guidance to fit every scenario that quickly. So it's a matter of interpretation and just documentation to come across to the lenders.
So we do have a question about participants who receive wages in a workforce. There's a WIOA or Pathways, which are federal programs for workforce. Are they eligible for emergency paid leaves? I was talking to or messaging Tony. I read somewhere that they were. I was trying to find, while Jake and Tony were trying, I was trying to find the guidance of where I read that they were. I know that there are some differences around like multi-employer collective bargaining agreements. So I am going to add that one to my list. I'm somewhat confident in that they do, but I do want to confirm with some guidance on that. Tony or Jake, do you have any other thoughts on that? No.
I don't. Sorry, Aaron.
yeah, I don't. I think they would be eligible, but the fact that it's a federal program, that kind of leads us to pause a little bit. Mm-hmm. So
I'll tee up the next question here. This one came in actually early. This one snuck through, I think, all of ours. So I'll apologize to who submitted this question. And a couple of people looks like they liked it. In terms of this applies to the PPP, Tony, for calculating the payroll costs that can be forgiven. Those for highly compensated employees greater than 100,000 must be excluded. Is that a correct statement?
Only those costs over 100,000 are excluded. So if you've got an employee and their annual salary is $150,000, you still get to count 100,000 for that employee, and then the 50,000 is trimmed off the top, and you would calculate the average monthly payroll based on a $100,000 cap, and then you would add on top of that other benefits that they receive, such as health insurance or employer portion of retirement as well.
So to be clear, you could, the one employee could have 108,000, right? Assuming you cap the compensation at 100.
Yep.
And then there could be some additional benefits that rise above the 100 for that one employee.
Yes, absolutely. Yep. Okay. So they get, just take your example, they receive $150,000 annually plus $8,000 of health insurance. You'd trim it down to $100,000 for the compensation, add the 8 for health insurance, and they would get to count 108. And then you average that out, obviously. So,
Tony, what are we? We haven't seen. Today is supposed to be the day that all our self-employed independent contractors can submit applications.
Yeah.
We heard anything from the banks? My understanding is that they have to use 2019 information. Have you heard anything to the contrary? Can they use 2018 information?
The guidance does allow for that. If 2019 is just not available, they can go back to 2018. I think what you're going to find, though, is your financial institutions are going to be relatively conservative, and they're going to push for updated information. So if at all possible, they're going to push you for that 2019 information or delay your application until you can get that done. I'm not speaking from a position of absolute guidance there, but just based on what we've heard from banks, they're going to be a little bit conservative there.
Yeah. The PPP, obviously, if people don't have their payroll stuff in for 2019, we've got a different problem. So I think that's why I don't think we've seen that question a lot. But all of these self-employed individuals, independent contractors, they're filing 1040s, and sometimes, especially in the world we're living in right now, they're extended, and so maybe they don't have their 19 done yet anyway. So
yeah,
question. And
but if we take that same situation and apply it to quarterly payroll reports, I have specifically had a client where the bank said, "I need your Q1 941 to do the calculation," and they had to hustle and get it done.
2020, right?
Yeah, 2020. So apply that. Clearly, under the guidance, you can take 2019 or the rolling 12. But this bank was saying, I need the rolling 12, absolute. So
they're really looking for super recent data. So 2018 might be off the table. That's to be determined and to be seen.
Yep. I'll take this just real brief question. It's kind of at the top. It's been bumped up a little bit. For companies that own their own facilities and equipment outright, can they deduct the fair market value of rent would be? So this is assuming that they've got no lease in place or they have no mortgage obligation. So deducting the fair market value of rent would otherwise be. That wouldn't be allowable. We're saying that you probably need an executed lease agreement or an executed mortgage document when it comes time for forgiveness.
To be eligible for the PPP, is there a time frame on when? I think we talked about this for when I think they're referring to employees need to be hired back. Once hired back, they need to terminate their UI as well, correct?
Yeah. So this is kind of a combo Tony Aaron question, but once they have an offer of employment, they would notify UI that they're no longer eligible for those benefits and they should report back to work or notify that they've been reported back to work. And then obviously you've got if you rehire an employee and return them to full FTE status and their compensation to the comparable level, they're exempt from the calculation. So you could rehire them on June 28th, restore them to full status, and they are excluded from that reduction in the forgiveness calculation. So I'm going to touch base on the terms of the EIDL loan. They are putting out guidance there as well. Initially, those EIDL loans were published to be up to 30 years in term, and currently they are much less than, I believe they're putting those out at 10-year loans max, I think is the most recent guidance that I've gotten. Well, we're coming up on 10:30 pretty quick. Should we take like one more question?
Yeah, the question couple down there, a certain bank told me that K1 income wasn't allowed on the PPP. I've heard that, to me, that's true, sort of. I think it's important that it's the terminology, I think, that's catching either the bankers up or, but basically K1 income, what's the K1 income that we're talking about? I think we got to be clear. And is this an S corporation or is this an LLC partnership? Because K1 income is, for an S corporation, would be the flow-through income. There is no wages the wages are not specifically lined out there. So you're right, that would not work. We need to look to the wages in an S corp setting. In a partnership, maybe. So the flow-through income in one of the certain boxes, we believe maybe should qualify, but banks are pushing back. However, as Tony mentioned earlier, if it's guaranteed payments, the guaranteed payments are triggering and for sure qualify for the PPP. We're having a really big kind of unknown right now that I hope we see something soon on, is specifically partnerships where there's no guaranteed payments, but income that's this quote K1 income that's flowing through is still subjected to self-employment tax, looks and feels like any other income that's qualifying for the PPP, but banks they're not signing off on it just yet. And I think that needs to change, because in theory, it's essentially just another Schedule C on a different form. But I mean, I'm not the one handing the money out either, though. So, Tony, I know you and I have discussed this. I think I've asked you that question enough to you know what I mean. So, do you have just a quick thought on that, and then we'll wrap it up?
Yeah, I mean, I think from the bank's perspective is, you know, these are not self-employed individuals. They're partners in a partnership. So they got to follow the guidance that they're given, which is guaranteed payments. You know, that's the measure of what those partners are making for compensation from the partnership. We may see some give on that because, you know, some partnerships, you know, box one, that's going to be potentially SE income, but not all of it's SE income, depending on the type of partnership or partner that they are. So definitely need some additional guidance, but I understand that from the bank's perspective, these are not self-employed individuals. They're partners in a partnership. All right, with that, I think we are going to wrap up. We're getting really close to 10:30. Thanks to everybody who stuck around to the end here for this additional round of questions, Q&A. Again, we're going to publish this webinar. It's being recorded. We're going to render that and get it posted up to our website as soon as we can. And then we'll also share these slides out on our website If you have a question that just wasn't answered, we weren't able to get to it, or you've got a specific scenario, you've got our contact information in the slides. Please feel free to reach out to one of the panelists, and we'll try and get you either connected with someone who can answer your question, or we'll obviously do our best to answer your question as well. So again, thank you, and everybody stay safe and healthy, and we appreciate your time.
Thank you for joining us today.